Every single time we've been looking at the news lately, I've been seeing a new company that is going public via a SPAC merger. And just today, I found another company called Sixterra that is going public via a SPAC merger in a deal that will value the company at $3.4 billion. This merger was just confirmed earlier today, and now it is official. So this company actually looks really interesting. It's not like many of the other SPACs that are very speculative. This company actually generates a significant amount of revenue. And so what it is right now is the SPAC is called Starboard Value Acquisition Corp, stock ticker symbol SVAC, and they are discussing a deal that would value Sixterra around $3.4 billion, including debt, and that deal was confirmed earlier in the day. Sixterra has more than 60 data centers around the world. They service thousands of companies and government agencies, and data centers are a very important area right now, very important and growing industry, and it is one of the largest so-called retail colocation providers, with its data centers serving and connecting multiple customers and supporting the widespread adoption of hybrid cloud infrastructure. So between their data centers and supporting the adoption of cloud infrastructure, they're in a fast and rapidly growing industry, and demand for like data management and all of that was already on the rise in 2021, in 2020, especially because of the pandemic, pushing everything to go online even more so than it was already. So there's growth in the internet-enabled things, Internet of Things, and everything going online, pushing for more data centers, more infrastructure for everything that Sixterra does. And what I really like about Sixterra is not only are they a U.S.-based company, but they also had revenue of roughly $690 million in 2020. And this deal values them at about $3.4 billion. We'll have to do some more digging into the stock to see all of their financials. But with the merger just announced, and typically what we see with SPACs is that they do have a significant rise up until the merger announcement, and which we just had, and then we'll have the merger date and the confirmation of the merger date, so which it'll be sometime in 2021. But either way, this company is not like the other SPACs because they're already generating close to $700 million in revenue. Their valuation is $3.4 billion. I need to see, their profit on that and, what they're spending each year, but revenue, no matter how you look at it, of about $700 million, valued at $3.4 billion in a fast-growing industry. Seems like this stock really is something you're going to want to put on your watch list, do a little more digging into as we get some more numbers now that the merger is confirmed. So it'll be interesting to see what happens here, but I recently bought some of this right before the merger announcement. I told everyone in our group on Patreon about it, so if you want to join our investing group, make sure to join that, but definitely make sure to check that stock out. Speaking of SPACs and a lot of rumors, though, we heard a lot recently about Lucid Motors and their potential merger with CCIV. And Lucid Motors right now, they've been in talks for a while. We first mentioned them on my main channel back when it was at $13 a share. I told everyone in our group on Patreon to at least put the stock on their watch list. I bought some of it at $13 a share. Now it's sitting right around $60 a share. And according to a report from Bloomberg, the merger could be confirmed this week, tomorrow, on Tuesday, according to two insiders and the Bloomberg report. So they said the talks are still ongoing. They could fall apart. We always know that is a possibility, but they said it looks very promising, and we could see a merger confirmation as early as Tuesday of this week. And with this, the combined entity value of after the SPAC would be $15 billion. That's with the $10 stock price of CCIV. Right now, CCIV is already at $60 a share. So that means it's valuing Lucid Motors at right now $90 billion, right? 6 times 15. $90 billion. So that is a very expensive stock. We still might see it rise up because of all the hype around Lucid Motors, but a $90 billion company for Lucid Motors when it hasn't even delivered any vehicles yet, that's really high valuation. So they're expected to get their first vehicles rolling off the line in 2021. And it's going to start off with their most expensive model, which is over $150,000. They will continue to make less and less expensive vehicles, more affordable vehicles as time goes on. But in my opinion, if you're looking at getting in it now, it is a very risky play. Very risky play because, first of all, even if the merger is confirmed within the next couple of days, Lucid Motors is targeting the luxury market at first, so it's not as big of a market as Tesla. Most people can't afford a $150,000 car, even a $70,000 car, which would be their least expensive model at the beginning. So I know over time they are going to be looking to develop more affordable models, but just remember, $90 billion is a sky-high valuation, an insane valuation for a company that generates no revenue yet and still is working on building the factory and getting their first vehicles off the line. It's just an extremely high valuation. Really, it's unreasonable to be that high. Not to say it won't go up anymore just because of all the hype, but if you're looking at it long term, you have to be really careful. There are some, I would say, a lot of great opportunities out there that are probably a little less expensive than this right now. The good things that Lucid Motors has going for it, has a great name. The CEO of Lucid Motors was previously a Tesla chief engineer of the Model S. And they also are backed by Saudi Arabia's sovereign wealth fund, which put over $1 billion into it. They have, factories that are in the U.S., looking to build one in Saudi Arabia. So they are making a lot of progress, but just keep an eye out on them. We should expect to see the merger, according to these rumors, be confirmed within the next couple days, but it is a very high valuation at this point. So let me know if you're in this stock already or if you're not. Another stock that we've been talking about a lot lately, we're starting off with a lot of stocks in this video, but we're going to get into some more stuff on crypto. Then we have some more tech news. And then at the end, we're going to also cover a little bit more on a couple of SPACs as well. So pretty heavy on the stocks in the beginning. But Palantir was on a roll since its IPO earlier in 2020. It was up over like 300%. It went all the way up to touched $46 a share. Now it's back down around $30 a share. And people were wondering why it dropped about 30% in a week or two. And really, it's just they have a very high valuation as well. So they had a very high valuation. They're promising a lot. The company is a great company. They have large contracts with the military and the FDA. They have a large contract with them. They have contracts with large organizations aside from the government, and they're continuing to grow, continuing to secure these multi-year agreements that are worth hundreds of millions of dollars, a couple $1 billion sometimes. And what I really like about them is that they are a big data company that is really intertwined with the military and the U.S. government, but they're also getting contracts with countries overseas and large organizations now. So they are securing these contracts, which are multi-year agreements. Every time they get a new one, it's just adding recurring revenue onto the business. I like that. But recently, we have big news because Cathie Wood's ARK Invest just purchased another 5.2 million shares of Palantir. They've owned it for a while. But recently, the stock price has been skyrocketing, and they just bought in even more, causing Palantir's stock price to go up about 15%. Cathie Wood told CNBC the other day that she upped her bullish position in Palantir after hearing management's comments about aggressively investing in the future now so they could take advantage of all of the innovation in the years to come. Cathie Wood said that it's interesting to listen to Palantir's CEO. He was speaking their language. He was basically saying to investors that they're playing a massive space here, and they're going to invest aggressively now in order to capitalize on exponential changes that are taking place in the data place. And she said that that's music to ARK Invest ears. They love investing in companies we know that are disruptive, innovative, trying to take advantage of trends in the future. And Cathie Wood said for that reason, they really like Palantir. Even at the current valuation, which is around a $50 billion valuation for the company, she thinks they're growing very rapidly. They're securing all of these government contracts, and it doesn't look like they're slowing down anytime soon. It looks like they're just getting started, and she just bought another 5.2 million shares of the stock. We do own this stock in our public group on Patreon. Our portfolio is up already 35% for 2020, and this stock was a part of that for a while. Now on to our Bitcoin and crypto news for the day. So, Bitcoin. Skybridge Capital founder predicts that Bitcoin could reach $100,000 this year due to heavy demand and diminishing supply. Bitcoin has been on a roll. At one point this year, one point within the last year, it was at like $10,000 per coin. Now it is already well over $50,000 per coin. And the founder of asset management firm Skybridge Capital, he predicted that Bitcoin will reach $100,000 this year. This is pretty big news because most of the time we hear these big predictions from either innovative minds or people who aren't heavily integrated into the traditional financial industry. So this is very interesting. We've heard Cathie Wood say that Bitcoin could reach $500,000 within the next 5 to 10 years. We've heard Elon Musk say that Bitcoin, he thinks, is going to continue to do well, but we haven't heard like traditional finance people say that Bitcoin is going to be skyrocketing over $100,000 of coins. And this is big news. So he said is that right now you don't have a lot of supply of Bitcoin. There is a limited supply. 21 million coins will ever be minted. No more than that can ever be mined. And as people put more and more money in, as large institutions put money in, that supply is never going to change. It can't go up from that. So as more money goes in, it's just going to cause this price to skyrocket because of the heavy demand and low supply. And right now, what's even bigger than that, even though there are 21 million coins out there, according to blockchain analytics firm Glassnode, they said that 78% of the Bitcoin supply is not liquid. They said that currently 14.5 million Bitcoin are classified as illiquid, leaving only 4.2 million Bitcoin in constant circulation that are available for buying and selling. So either people have lost their passwords and no one will ever be able to recover those Bitcoin, or the other options are people have them in cold wallets where they're not on exchanges anymore, where they're just keeping them for long term. That's another option, a way that people store their Bitcoin. So really they said only 4.2 million are in circulation that people are like investing and trading in actively. And that's really not a high supply for when you start taking into account large corporations putting Bitcoin on their balance sheet. We saw Tesla buy 1.5 billion of Bitcoin. Other large firms, such as the NASDAQ listed MicroStrategy, has accumulated 70,784 Bitcoin. And so a lot of companies, as they're starting to add Bitcoin to their balance sheet, or let's say it's MasterCard and they want to have some Bitcoin on their balance sheet because they're going to be processing transactions. When you start taking that into account, 4 million Bitcoin being in circulation, that is not a lot when you start taking in billions of dollars, and that's going to cause this to skyrocket even more. If 14.5 billion are in cold storage, they're not available for trading, we're going to see some pretty big movements as we start getting more and more money go into Bitcoin. And this is just big news, seeing an asset management firm, a traditional finance person, say that they think Bitcoin could reach $100,000 this year, because most of the time we don't hear from the traditional finance space being as all in on Bitcoin, as all pro Bitcoin. But it seems like we're finally getting there, and it makes sense that if there's only 4 million in circulation, that we're going to see this continue to go up as more and more corporations pour billions into Bitcoin. Now with Dogecoin. So there's a story the other day that I read that was really interesting, and that is that one single account holds $2 billion of Dogecoin. And Dogecoin, it really started as a joke. Elon Musk has said on Twitter that it was started as a joke, as a meme cryptocurrency, and no one ever expected it to get to this point. But right now, there's one account that holds about 36.8 billion Dogecoins, and that's about 28% of all coins in circulation. No one knows exactly who owns this account. Some people are speculating that it could be Robinhood, that Robinhood could be the one that holds this large of an account, but no one knows for sure. And right now, something that's interesting about this is that just the other week, it received 28.061971 Dogecoins, and people thought this was interesting because it looks very similar to Elon Musk's birthday, which is June 28th, 1971. And people thought, is this a coincidence? Why is it like this? And while Elon Musk has spoken about Dogecoin in the past, it's very unlikely that this is his account. It's nearly impossible this is his account. Recently, he's spoken about major Dogecoin holders to sell off all of their holdings. He tweeted about this. He said too much concentration, one person having too much, is the only real issue. And this is just something to keep in mind. Some people think, according to the London-based asset management firm CoinShare, they told reporters that they doubt anyone has done any serious blockchain analytics on Doge, and they can't believe that they're having the conversation about this right now, but they think it could be that the person with this amount of Dogecoin is probably going to be some sort of firm, maybe that handles trading, which is why they think it could be Dogecoin. But no one is 100% sure what account this is, but I'll keep you updated. That is pretty interesting, though. Someone has about $2 billion in Dogecoin in just one account. That's 36% of the entire supply. And that's it for the Bitcoin and crypto news for today. But another story in the news that I saw a video on TikTok about it, I think at first, actually, is that United Airlines, they had a flight, a Boeing 777, that suffered engine failure after takeoff from Denver, and debris just landed in parks, in people's front yards. And surprisingly, no one was injured, which is great. But if you look at these pictures, like, this is in someone's front yard, and they just have a part of, it looks like the propeller, around the propeller, is just sitting in their front yard. In a park, there's just parts of the wing just sitting in the park. And not even that. I don't know if you guys saw the video, but this video is of the propeller and part of the plane. It looks like it's on fire. It is on fire, and I don't know how they managed to land this, but it happened just after the flight took off in Denver. I think it was scheduled to go to Hawaii, but they ended up turning around after this malfunction, and everyone ended up being fine. There were no injuries, no fatal injuries, and everyone ended up being fine. But this is pretty scary. And right now, more of the Boeing has had issues with all their flights over the last couple of years, and this is not good for Boeing. This is another model now that had a major malfunction, and the Boeing 777, they are going to be decommissioning and taking a lot of these out of service. United took 24 Boeing 777s out of service as the FAA orders inspection. We're seeing some of Boeing's 777s being taken out of service in Japan as well. And I think over the next couple of days, we're going to see more and more of these Boeing aircrafts being taken out of service for inspection. and this is not good for Boeing stock. I'm happy everyone is safe, and that was a very surprising thing that the debris didn't injure anyone, that no one on the flight was injured. But now with this issue, Boeing is just in another big story that they definitely don't need right now. Airplane industry, travel has been suffering, and Boeing has been suffering with all of their different aircrafts that have had malfunctions. And this one, adding to it, is just not going to make things any easier for Boeing. They just got over their other malfunction, getting all those other airplanes back into service, and now this happens. So we'll have to wait and see how that plays out. But it is not good news for Boeing. But I'm very happy that everyone who was on the flight, everyone in Denver and around the area was safe. And we'll have to wait and see what happens with Boeing and how they're going to respond to this. How many flights are going to be taken out of service to be inspected, and what else is going to go on. Speaking of new videos that came out, one video, a concept video, was leaked from Samsung, and it's how its first AR glasses might look. And someone called Walking Cat, which is a fairly reliable source for gadget leaks over the last 5 years, published 2 new concept videos that show off some of the fun things that Samsung's AR glasses that they're currently working on could do. And some things they could do is like project a giant virtual screen where you could play games or watch movies. They also show an auto-dimming sunglass mode, or a lot of or you can act as a first-person view screen for your drone, just sitting, in your house looking up with your AR glasses. And they leaked 2 videos. None of this has been confirmed yet. But the first video is for this one right here. So they're talking about the different offerings like AR Office. Obviously, the technology in these videos that you're seeing right here is more advanced than they probably would be able to do right off the bat. But this is like the view of the future. They're talking about office calls, simulations, screens, and these are the Samsung AR glasses that they are talking about, and the leak that they did have on those. And the other one is with right here, the Samsung Glasses Lite. I'm just gonna keep it as a smaller screen, but to me they look a little big. Obviously, if they're able to do a lot of this technology, they're going to need to be bigger at first. Always we start off with, bigger, and it gets smaller over time. But one thing that's pretty important with this is that a lot of people were talking about the guy using his smartwatch right there to control the AR glasses. And a lot of people think that's definitely something that we're going to see happening, because to be able to control just in the air, looking at something, is a long ways away. But being able to control a smartwatch or something on the glasses to be able to control what you see is much more possible at this moment right now. So the other video shows the guy just looking and controlling everything with his hands in midair. This one, the Glasses Lite, Samsung Glasses Lite, shows them controlling everything with a smartwatch or on the side of the glasses, and that looks really, really interesting as well. They still are fairly big glasses. They don't look like, for example, my glasses, which do have big frames, but these have much thicker frames, and it is really cool, though, because controlling it with a smartwatch, controlling it with the side, that looks really interesting, and that's something that I think is definitely something we'll see within the next probably year to year and a half be released. So we'll have to wait and see what happens there, but that looks very interesting as well. Another new company, another new technology that I recently saw that I really like is, I don't know if you guys see a lot about these electric bikes, electric scooters. Where I live, there are a lot of electric bikes, electric scooters. Most of them are like ride sharing, but a company called Furo Systems, which is a London-based company, just launched their Aventa series of pedal assist e-bikes into the European market, and they said that a more powerful, faster US model is planned for later in 2021 or in early 2022, depending on if we have any delays from the pandemic or any other complications, but it's expected for later in 2021 or early 2022. And this bike, in my opinion, looks really great. There are a lot of electric bike, e-bikes out there right now, but Aventa is sold in 3 variations. Each model is priced to include all the accessories needed, like mud guards, a bell, luggage rack, kickstand, front and rear lights. They're all sold with these already part of the package, and they're selling right now for the standard one, selling for 1,799 euros. The Aventa Max is for 1,999 euros, and they are looking to add other models as well, especially introduce one that's faster in the US. But the company Furo Systems, I really like how the bikes look, and they appear to be a company that is going to be around for a while. They recently raised about 750,000 euros, about $1 million from investors, just ahead of this Aventa launch and the launch of those 3 different models. That really isn't a lot of money, 700, about $1 million, compared to all their competitors, which are like Rad Power Bikes, which raised 150 million, VanMoof, which raised 40 million, Cowboy, which raised 26 million, and all these other companies. But the CEO says that the company was already profitable before the November funding round of about $1 million, and they said that in addition to their new Aventa e-bikes that they're working on, Furo Systems already sells Fuse scooters and Furo X folding e-bike. So they already are selling scooters, e-bikes, and they're just adding more models to their lineup. This company isn't a publicly traded company. It is still a private company that raised funding recently, but I think eventually we'll probably see it be a public company or be bought out because they have a very cool design, and they are gaining a lot of traction in the European market, and they're looking for expansion plans already overseas, which is a great sign for a young company to be already looking overseas, doing well in the markets that they're in. I really like the bike, and I probably would buy one if it was in the U.S. Let me know. But do you guys like this design? I think it's a pretty cool design, and if I needed an e-bike, this would definitely be one I'd look at. Finally, let's wrap up today with some SPAC news. So there's a $250 million SPAC out there right now that is going to be IPOing. It doesn't have any company that they're looking to merge with yet, but they're looking to the e-commerce transportation space. E-commerce and transportation focused SPAC called Ocelot Acquisition Corp 1. They registered just the other day with the SEC, and they're looking to raise $250 million through an IPO. And right now, this SPAC, the stock ticker symbol, it hasn't been confirmed yet. They've just talked with the SEC, but the filing says that this SPAC would be eyeing acquisitions in the e-commerce, transportation, and logistics technology industry. And it notes that the management team has experience in this space already. In 2020, Ocelot invested in Lone Star Overnight, which was a parcel delivery company in service in the Southwest. And in 2019, the same management team made an investment in the last mile provider Scoobies. So they do have experience in this space, in e-commerce delivery space. And so this could be a pretty popular SPAC. We don't know what they're going to be merging with, but the offering consists of 25 million shares priced at $10 per share. And it's going to trade at the NASDAQ, listed under stock ticker symbol OACAU. We don't know when it's going to go, when we're going to be available to buy the shares yet. But this is just something that I read. I thought you guys should definitely keep on your watch list because the SEC filing says that they are looking for the most attractive opportunities in right now in the space, because as freight brokerage, third-party logistics, transportation management, final mile, and cold chain logistics and warehousing are growing. I think that's definitely an industry that they want to look into. And I agree. I think e-commerce, logistics, shipping, that's It's not going away. People are going to be looking at how to improve it, how to make it go faster. So if they're looking to take an innovative logistics or delivery company public, I think that's definitely going to be something we will see do well. Amazon has next day delivery. Eventually, we're probably going to see same day delivery in a lot of places. So we'll have to see which company they end up looking at, what company they take public, but just something to keep an eye out on very early on before other people know about it, and that is stock ticker symbol OACAU. And the SPAC should be going public any day now. And lastly, I've been getting a lot of questions on our main channel about IPOF and IPOD. And these are two different SPACs that are run by Chamath Polyhoptia. And right now, they're trading at a premium. So they're trading both at around $15 per share, IPOF and IPOD. And that's about a 50% premium from its offering price, which is surprising. It's pretty high, especially since there's no companies that they're set to merge with yet. They're just basically piles of cash. But the reason that people invest in them, I have them myself also, is that you're not just investing, you're investing in Chamath and his ability to find innovative companies and take them public. So he's taken a lot of companies public. He's done very well. He's a very, renowned investor, and just putting your money into those is putting your money into him. And a lot of people right now, especially with all of the craze going on around SPACs, they want to be in a SPAC, and they especially want to be in one that's run by Chamath. But some analysts are saying they don't understand why anyone would pay a 50% premium for what's just a pile of cash. But I think when we do have a merger confirmation for either IPOD or IPOF, we're going to see these skyrocket significantly. And there's no way to know when a merger will be announced, but all you can do is, you could have a small portion of your portfolio put into these two different stocks. So when the time comes, when Chamath finds a company to take public, you'll already be in there. You'll be in there early, and you'll be able to take advantage of any of the upside from the merger announcement and a merger confirmation. So me personally, I do have money in both of these. Just a small amount, just so I could take advantage of any of the investments he makes and take advantage, get in them early now, so when a merger is announced, I'll be able to have all of that upside moving in the future. But let me know your thoughts on IPOF and IPOD. Are you invested in them, or do you think you don't want to invest in them right now because they don't even have a merger announced yet? But I hope you guys enjoyed today's episode. This is like episode number 1 of our podcast. We're going to talk all about stocks, investments, tech news, just other business news as well. So let me know your thoughts on that and comment down below. Today we're going to do something really random. Comment down below book or a book emoji if you made it this far in the video. I really appreciate all you guys watching, and I hope you enjoyed. But I'll see you guys in the next episode. Don't forget to get your 4 free stocks, each valued up to $1,600 when you download the Webull investing app. I hope you enjoyed, and I'll see you guys in the next episode.